So today I'm talking about taxes in the state of Florida. Yay! No, but seriously, we have to know the good, the bad, and the ugly about taxes. So that's what we're talking about today, and we're starting right now. Hi there, what is up? I'm Kathy Williams, your friend in real estate in Orlando, Florida, and welcome to the channel. If this is your first time here, I talk about the Orlando lifestyle and all things real estate. And if that's something that you're interested in, then go ahead and subscribe to my channel and click that bell, and that way you won't miss out on any upcoming videos. So, taxes. The word just makes people's head roll. No, head roll? Eyes roll? Brain roll? I don't know. It makes something roll, and it is painful. But we have to have taxes to build roads and have libraries and all the things, schools and all the things that we want in our communities. So taxes are there for a reason. And you know, the good thing about Florida is that we don't have any personal income tax, which is a great thing. So where do we get our taxes in the state of Florida? I'm going to answer that question for you and also explain to you about property taxes a little bit. So stay tuned to that. That's going to be right at the end of this video. It's a short video, so hang in there. You'll get some great tips on things to know if you're going to move here and you're thinking about those type of numbers added into the cost of buying a home and living here. You know, it's important to know what you're going to be looking at tax-wise. It's part of the whole equation of buying a home and moving to the Orlando area. So let's just get started with sales tax, for example. Sales tax in the Orlando area is about 6.5%. It averages between 6.5 and 7% throughout the state of Florida. That's not super high compared to other states. I think it's right about in the average. Florida relies heavily on transaction taxes, and we get a lot of transaction taxes from tourists, but also it comes from everywhere, from buying cars or from buying houses. A lot of different purchases that go on in this state, you know, are providing the tax coffers. Our cell phone tax is about 14.86%, whereas other states usually run in the 12.86 or so percent. And Florida has some of the highest utility taxes. So we're higher than average for the rest of the country for our taxes on your utilities. But our bills are much lower probably because we don't ever use heat, air conditioning in the summer, but really not much use for AC or heat in the winter months. Now let's talk about property taxes. So if you're moving to Florida, you're also going to be buying a home. You're going to be looking at what your property taxes are. Florida's property tax ranking is right about in the middle. We're at 25. So out of 50 states, we're right smack dab in the middle for what we charge for property taxes. Now, when you look at buying a home in Florida, there's something called doc stamps or documentary stamps that you have to pay when you buy a home in Florida. And that is a tax on the purchase of the home. It's a one-time tax, but that adds to your closing costs. Some people are pretty surprised when they look at the closing costs of buying a home in Florida, and a big chunk of that goes to doc stamps. So that's an additional way that we collect revenues for the state of Florida. Every time somebody buys a house, it's cha-ching, they get some more money. As promised, I was going to explain to you a little bit about property taxes. So in the state of Florida, we have Homestead Exemption. And what that is if your primary residence is the home that you're buying or the home that you live in, you're allowed to apply for Homestead Exemption. And what that does is that gives you an up to $50,000 discount on the price of your home, and that's how they estimate how much your taxes are going to be. So if you have a $300,000 home, they're going to take $50,000 off that and tax you based on a $250,000 home. So this can only be for your primary residence. It can't be for a vacation home or a rental property or another property like that, land that's vacant. It has to be for your primary residence that you live in over 50% of the time of the year. So you can't have two homes that are homesteaded. Only one home in the state of Florida can be homesteaded by you. So that's a really great thing. We also have another thing that really helps people is called the Save Our Homes benefits. And what that is that actually helps your property taxes from going up year over year. So let me give you an example of how the Save Our Homes benefit works. So say, for example, you and your neighbor have the same exact house on the same street, same lot, everything is the same, but somehow your neighbor is paying about $3,600 a year in taxes and you're paying around $5,000 a year in taxes. And you may say, well, what's going on with that? How come we're not paying the same amount of taxes? Well, that is the same Save Our Homes benefit. And what that is that neighbor whose taxes are probably around $3,600, well, he probably bought his home about 6 years ago. And there is a cap on the amount they can increase your taxes year over year. If you're living there and it's your primary residence and it's homesteaded. So they are at $3,600. You just bought the home this year. You're going to be taxed at the current rate. Now you're going to get that same benefit applied to you year over year as you own the home and it's your primary residence. So it's just a way of keeping people from, for example, if you live in a home for many, many years and you retire, you don't have to worry about your taxes going up and up and up because home prices are going up like crazy. And the scale of the home prices going up, you can see from this graph, is much lower than what they actually estimate your taxes on. So that's how the Save Our Home benefits work. And it's a great thing because, nobody wants to pay more taxes, that's for sure. So one more thing I wanted to talk to you today is about the non-homestead cap. This is for second homes, vacation homes, rental properties, that sort of property that's not homesteaded. So this cap is a 10% max cap that they can assess your home on year over year. So they cannot increase the value of your property more than 10% every year to assess your value on. So that keeps you from also, as a non-homesteaded but property owner, from your property taxes going up insane amounts in the state of Florida. So I hope that was helpful. If you have any questions about moving to the Orlando area or buying a home here, please don't hesitate to reach out and download my free relocation guide. That's my free gift to you. It's just down in the comment box below, the link for that. And I hope you will join me on my next video. Take care. Bye-bye now.